Joining us in the Singapore studio is Philip Malone, who's a spokesperson for the British High Commission in Singapore. And in our Hong Kong studios, we have one of our regular commentators, who's Peter Churchouse, Advisory Director at Morgan Stanley. Gentlemen, thanks a lot for joining us. Philip, let me begin with you, first of all, as a representative of the UK government. I mean, here in Asia, particularly, I suppose that what Ben was saying would apply just as much, that whether the euro, whether the sterling is part of the euro or not, is not necessarily a concern as far as traders are concerned or as far as a British business is concerned in this part of the world.
Yeah, I mean, I think the important point in all this, of course, is that the British government is making an important statement this afternoon. It would be foolish for me to try and speculate on what will be said. But the key point being that it will be in Britain's national economic interests as to whether or not we decide to join the euro at this stage or indeed later.
What will be in Britain's economic interest, to join or not?
Well, that's a very good question. Of course, the Chancellor set the 5 economic tests, as we well know, 6 years ago now, and they will be assessed, and we look at the position once that assessment has been carried out.
Well, let's see what Peter Churchouse of Morgan Stanley has to say. Peter, these 5 tests, what are they, and how close do you think sterling is to them?
Well, I think the British government is looking not just at the monetary tests, which was really the nominal things such as interest rates and inflation, but is looking more closely at the real effects, the convergence of these economies in real terms. And quite frankly, although we've had convergence in terms of interest rates and inflation over the last 6 or 8 years, I think the UK economy has not really converged with Europe in terms of things such as employment and real economic growth, where it's actually outperformed Europe quite substantially. So I think in terms of straight convergence in real terms, the UK is doing a lot better than Europe at this point. So I think that's going to be one of the key factors here that I think Gordon Brown will be looking at.
Peter, let me just ask you a very broad question about this. Is the economics really the issue here at the end of the day, or is it going to be a political decision? Let's put it in the context of the US situation, right? Here you have a trading area, the United States, which is bigger, only slightly, bigger than the European zone. They have similar budget restrictions in their individual states. There is law which says they must conform to certain budget restrictions. And they manage to have a single currency, which is not a problem. They manage to maintain a single interest rates for a very diverse set of economic circumstances. Why, in general terms, is it a problem for the Europeans to consider having a similar setup?
Well, I think, quite frankly, as far as Britain is concerned, there's a lot of history involved here, and you so rightly point out there's a lot of politics involved. In fact, surveys done last month, in the early part of the month, suggested that just over 60% of the British public would reject right now, either probably would or outright reject joining EMU at this point. Even the Confederation of British Industry, which has always been very, very positive towards joining over many years, is decidedly neutral right now. So I think, quite frankly, there's not just the economics, but there's also, I think, a public opinion issue here, and even if the business community is decidedly wavering, I think the case for going forward just at this point, I think, cannot really be made that clearly.
Peter, it's Ben Pedley here from Dow Jones Newswise. I'm just wondering, in the context of Britain, their economy has traditionally run relatively high inflation compared to most economies in Europe. And even right now, we've got interest rates in the short end of the market at 3.75%. That's a 50-year low. But in the Eurozone, they're already well down at 2%. I'm just wondering, can Britain afford to have the kind of one-off monetary stimulus or ongoing monetary stimulus that would be afforded by notionally cutting rates from 3.75% under a UK-only system to 2% under an ECB or Eurozone-wide system?
Well, that's exactly right, and I think that will come into Gordon Brown's factoring. And you were talking a little earlier about funds flows and where sterling stands relative to the euro and so on. I think one of the issues that is actually figuring in traders' minds and investors' minds right now is, as you mentioned, that huge interest rate spread. Investors around the world are very yield-focused right now, and this huge spread between the euro bloc and Britain is 175 basis points point spread, I think you're going to see that you'll see a bit of a funds flow, at least short term, back into the sterling at this point, given that the euro has actually appreciated 11 or 12% against sterling since the beginning of this year. So I think you'll see a little bit of a swing back to take advantage of this big yield pickup that we see in sterling right now.
Philip, the political aspect of this, as we've said, is extremely important. Does the political aspect play into foreign perceptions? I mean, is there a suggestion that somehow the rest of the world would regard the UK as a lesser place for joining the euro?
No, I don't think so at all. I mean, certainly the political issues are very important on this, and there's no denying that. But ultimately, the decision that will be taken will be based on the economics, as our colleagues have just been discussing.
But, you know, the reason I ask is because within the UK itself, obviously the stature of sterling is one that moves outside of any kind of economic consideration. It's a social and political and emotional reaction that's going on there. Certainly the UK residents have to be making their decision on other considerations. How would you rate the political situation facing Tony Blair right now, should he decide the decision needs to be made soon?
Well, that's obviously an extremely good question. I mean, these are issues that the Prime Minister and Gordon Brown have been taking into consideration. But I'd say ultimately what will really come through in all this is the country's economic interests. And when this is presented to the people, if the government decides to go into the euro, then obviously they will do it in such a way to convince people that it is in everybody's interests from the perspective of employment, investment, or whatever it might be.
So let me just parse what you're saying a little bit, if I might, because what you seem to be saying is that Gordon Brown is really the man that's going to decide here, irrespective of the political consideration.
Oh no, not at all. This is a cabinet decision. There was a meeting last week where the cabinet discussed this in advance of the Chancellor's announcement today. So this is very much a government decision.
Philip, I don't want to simplify the argument too much in terms of public opinion in the UK, but it would seem to me that the Brits as a whole don't particularly like the French and the Germans, and they don't really particularly like the idea of monetary policy or money policy as a whole being conducted somewhere out of continental Europe. How can Tony Blair, let's assume that he does want to take Britain into the euro and they do satisfy the 5 economic tests at some point down the track, how do you sway the British voting public to agree with you and agree to scrap the pound and adopt the euro?
Well, the important point in all this is, of course, that if Britain were to go into the euro, we would still have a veto on economic and financial policy within the European Union. It's not something that we will give away. So we will still be able to have a say in how this is done.
How can Britain justify having any kind of veto in Europe with the kind of half-hearted involvement that it's been showing in the European situation up until now?
Well, I think that's a bit unfair. I mean, Britain, particularly since 1997, with this government, has been very closely engaged in Europe in areas such as economic reform, enlargement, the European defence policy. Yes, the euro is one of those important issues, but Britain has been very closely involved in Europe and will continue to be so.
Peter, from the perspective of economic ties, there is the suggestion, and in fact it's one that one of our viewers has made this morning. James Lee writes to us from Shanghai saying maybe Britain should be looking to joining the dollar rather than to joining the euro here. Is there any kind of suggestion here that perhaps the economic side of things puts Britain in the US camp rather than the European?
Well, I think for many years the pound has traded very much more on the US dollar nexus rather than the European nexus in terms of just its simple trading history over the long term. And certainly, of course, there's a great deal of political affinity with the US really since the Thatcher days back in the early 80s. So I think there's a lot of commonality of policy, political policy, and also just in terms of the currencies over quite some long period of time. But in terms of physically linking to the dollar in the way that perhaps the Hong Kong currency has done here, I think that's totally out of the question here. And I think we cannot really deny the politics involved in this decision we're likely to see today. As you can see, Tony Blair and his party are undergoing a fair amount of brickbats over Iraq right now, and to bring up something that is perhaps so obviously against public opinion as joining the euro right at this moment, I think would be a big political step for them, certainly before the election. So I think that's going to be a no-no.
Peter, we're running out of time. I want to put the last question to you, and it relates back to something Ben was saying earlier on about Saudi trading going on here. This is a very broad question, so please try and keep it as short as you can, because you can talk about this for hours. But there is a lot of concern among a lot of market players right now that the dollar is on a slide that is commensurate with its current account situation, its twin deficit situation, which will take us into regions which could be very, very detrimental to the U.S. economy. Some people are even suggesting that the dollar as the reserve currency is in trouble because a lot of countries are trading now more and more in euros and are beginning to even talk about trading oil in euros and stuff like that. Are we in a position where the world is looking for another reserve currency right now?
I'm not sure that that's the case. I thought that a few years ago, but in actual fact, it hasn't really happened. What I think is really happening is that the U.S. is just dead paranoid about the world slipping into deflation. And it's really, I think, forcing the Europeans to shoulder a bit more of the burden in the global economy, to cut rates, to stimulate its own domestic economy, put pressure on the Europeans to do that. So I think there's an agenda here on the part of the Americans to really push the Europeans to stimulate their domestic economy. And I think there's also some concern in Japan for the same reasons. So I think that's what the Americans are saying is, look, you've got to do some of the heavy lifting in this economy, not just us as well. We'll let the dollar slide in that event for you to take up some of the cudgels here in terms of this very, very unidirectional world that we've been living in for the last couple of years where it's all been US-led.
All right, Peter, we're going to have to leave it there. Appreciate you joining us. I'd like to thank all our guests, in fact, this morning. Ben Pedliers with Dow Jones Newswire, Philip Malone from the British High Commission here in Singapore, and Peter Churchouse from Morgan Stanley in our Hong Kong studio.